We have had an election in Sweden, as I'm sure you're aware of, this weekend, and there's a lot of political uncertainty in the country right now. What's your perspective on that as an international investor?
Well, surely it is just representing what we have been living through in Europe for perhaps nearly coming up to 2 years, and that is a rise in the popular vote, a rise for good reasons in regards to the lack of distribution of wealth after the kind of financial crisis, but also because of the rise in anti-establishment, even to the anti-system. Now, of course, the Sweden Democrats are representing some parts of those new policies, new feelings. And it's true that leading up to the European parliamentary elections, I think we will continue to see these more popular governments, particularly we've seen in Italy, gain support to rise, to in fact further influence European policy going forward. That's their objective.
Do you see this development as worrying, or is the risks are the risks with investing in Sweden, have they increased?
I think there's a couple of questions then. The most important thing, what does it do to asset prices? Is it concerning for us as an international investor for growth? What it is doing is creating the difficulty of governments that did have strong majorities from a two-party leadership now to a coalition that have numerous parties, none of which, of course, are holding the power of sway. And that's creating either a reversal of reforms or slow reforms. And that in itself is concerning, that we don't have strong governance within particular countries.
But do you demand a higher risk premium in Sweden now than you did before?
Well, I don't think in the medium long term that's the case. There are very strong fundamentals that Sweden has. They still have the capacity, of course, to keep monetary policy loose and enable their competitive landscape through a less strong Swedish krona. So obviously, when there is indecision, yes, it is difficult today to look at the future value in these first few weeks ahead of us for asset prices. But we must step back from the political noise and understand where is the real value behind stocks, where is their growth coming from, are they reliant on funding going forward? Interest rates will surely rise in Sweden in the next 12 months. Which companies are going to be the most vulnerable? So if we look at this from a much more fundamental viewpoint, leave the politics, the noise aside, then hopefully we're making good medium long-term investment decisions.
And you mentioned monetary policy here, and many here in Sweden at least think that the interest rates here should be raised. What's your view?
Yes,
it should have been long ago.
Yes,
I might add.
And they should have also in the Eurozone been raised long ago. That is certainly our view as well, for the level of growth and the level of inflation, which is in Sweden very similar to the Eurozone area. There is no need to have negative interest rates. And in fact, it's macro-prudentially, it's showing an excess of liquidity, creating loans to companies that should possibly not still be existing today. We're keeping the zombie companies alive with very artificially low rates. So in regards to that prudence, central banks will rise to their responsibility of macro-prudential rules, and they should be raising rates.
But all these smart people have been saying this for quite a while now. Why aren't the ECB and the Riksbank and other banks listening?
Well, I think it would have been very difficult for the Riksbank last week to raise rates ahead of the election. I think that can be excused. And perhaps they also want to see the visibility of Swedish growth going forward. They will need also a path, a little bit, a known path of the ECB, mindful of the exchange rate between the euro and the Swedish krona. They will also want to move, I would imagine, in unison or as quite often is the case, the Riksbank often moving in unison, sometimes earlier than the European Central Bank. So I think it's sensible because of the proximity of the economies, Swedish economy, the continental Europe economies, they're very tied. Sweden is a very open economy as well, and just like the Eurozone has been very affected by the slowdown in Asian growth just in this first part of this year.
If we lift our eyes and look at the global investment opportunities, where do you see that they are greatest at this time?
Well, it is clear that the growth rate in the States, because of the extraordinary fiscal expansion, the pretty important for the domestic companies tax cuts, it is clear that there is going to be quite a strong capital expenditure cycle that should last through to next year. So the US is certainly an area where, not only because of its stable growth rate, but also because of its very strong tech sector and communications and consumer sector tied to growth areas of e-commerce, of digitalization, of artificial intelligence. That's the area where we're investing in the States. Now, aside from the States, obviously...
So you're overweighted in the States now?
Yes, we're overweight in the States.
What about the emerging markets? Everyone seems to be leaving them now. Isn't that the time to buy them?
Yes, there are certainly some new opportunities coming into scope. China would be one of the obvious areas where we would want to invest, particularly for the similar reasons I've just mentioned for the US, because of their growth drivers, because of new consumer patterns. And there are some attractive opportunities in companies that are not going to be subjected, because they're very domestic focused, not going to be subjected to the US trade tariffs if they are implemented going forward. So as long as we're staying away from the exporters, China looks to be a place to invest. India still has a good demographics, good growth. It's just a little bit overvalued at this point in time, so perhaps we just sit back, wait for a bit of market correction. There will be some opportunities in Latin America, but it's probably a little bit early yet.
I have to ask you a little bit about Turkey as well, because Turkey's President Erdogan, he replaced today the chairman of the wealth fund there, and there is a lot of volatility, of course, in Turkey right now. Is there an Erdogan risk premium on investments in Turkey?
There's certainly a risk premium when we have a leader of an economy that has taken on executive powers, and that is not respecting the independence of certain institutions, notably the central bank. So that creates some concern to us when we see that a central bank is not acting as it should for the level of economic growth, the concerns of inflation. So that's one key issue. Since the elections, we haven't received a strong set of fiscal policies. We do not have a clear path and understanding of where interest rates are going. And we see that because of the devaluation, a significant devaluation, around 40% of the Turkish lira, that there is going to be massive inflation, which will feed through into higher costs for imported goods and certainly consumer growth going forward will be compromised.
So you're not putting any money there right now?
Not at this stage. We need some more visibility before we invest in Turkey.